Welcome back to Crypto Unlocked. I'm your host, Crypto Daryl. Every few cycles, there's a moment when the noise quiets, the charts tighten, and the market collectively holds its breath. Right now, that moment belongs to XRP. After months of moving sideways, being doubted, dismissed, and written off as too old, XRP is suddenly standing at the edge of something big, a resistance level that can completely rewrite its history. The number is simple, $2.60, but what's behind that number is everything that's made XRP both legendary and controversial since the very beginning. To understand why this moment is actually crucial, you have to rewind. XRP isn't just another altcoin chasing narratives. It was one of the first digital assets built for real-world utility, long before use case became a buzzword. Ripple designed it to solve a trillion-dollar problem, the friction in global payments. And it's one of the few tokens being used in production by banks and fintech institutions. Yet, because of that ambition, it's also been on one of the most politically and legally targeted assets in crypto history. The SEC lawsuit slowed its momentum for years, keeping it suppressed while the rest of the market went parabolic. But here's the truth that a lot of people missed. XRP never went away. It just kept building in silence. Now, with the lawsuit behind it and Ripple Prime launching to connect institutional liquidity, XRP is finally free to trade without legal uncertainty. And the charts are starting to reflect that. Price action has been coiling just under $2.60, and that's no random number. It's the neckline of the multi-year breakout pattern, a level that dates back to its previous cycle highs and aligns perfectly with Fibonacci key extensions from the 2022 capitulation lows. On the daily and weekly timeframes, you can see the compression clear as day. Higher lows stacking, volumes start to expand, and the RSI pushing upward, but still leaving room before overbought conditions. In other words, the pressure is building. Every time price gets near $2.60, sellers come in, but they're getting weaker. The wicks are shorter, the pullbacks are shallower, and the rebounds are faster than ever. That's what you see right before a level gives out. Not a violent spike, but a quiet exhaustion of resistance. It's like watching water build behind a dam. The first cracks are small, but once the structure gives, the flood is unstoppable. If XRP breaks through at $2.60 with volume confirmation, ideally clearing $2.72 on a daily close, the technical path opens cleanly towards the $3 mark. The next zone isn't just a price target, it's a psychological wall that separates from belief to disbelief. Because the truth is, XRP still carries emotional baggage from its 2017 glory days. It was one of the first coins to make everyday investors feel like they discovered generational wealth, and also one of the first to remind them how brutal crypto can actually be when hype runs ahead of fundamentals. That emotional scar is exactly why this setup is so powerful. And XRP's chart is layered with memory. When it moves, it doesn't just move technically, it moves emotionally. A confirmed breakout above $2.60 wouldn't just trap shorts, it would awaken an entire class of sideline investors who've been waiting for redemption since 2018. But what makes this moment different from those old hype cycles is the institutional angle. For the first time in XRP's history, serious talks of an XRP ETF are entering the mainstream. Ripple's Ripple Prime platform, designed for institutional liquidity management, isn't just about payments anymore. It's an infrastructure piece that can support regulated investment vehicles like ETFs by connecting traditional finance systems with on-chain liquidity. That's the quiet part of this story that retail doesn't fully grasp yet. While everyone's staring at the charts, institutions are positioning behind the scenes. The timing of these ETF rumors isn't accidental. They're surfacing at the exact moment XRP's chart is coiled tighter than it's ever been in years, right before the kind of move that draws the headlines. If an ETF proposal or listing gets even hinted at, it changes everything. Why? Because the XRP supply structure is unique. Over half the token's coins total supply is already accounted for in Ripple's escrow system. which releases gradually. That means the amount of liquid XRP available on exchanges is far lower than people realize. If institutional demand starts tapping into that float, price discovery could accelerate faster than most expect. You're not talking about retail traders chasing pumps. You're talking about regulated capital trying to get early exposure before the next approval window. Now, let's zoom back into the technical side. If XRP confirms a breakout and clears $2.60 to $2.72 zones, give or take, the next logical resistance, it sits around $2.98 all the way up to $3.05, with extended Fibonacci projections reaching about $3.35. Those aren't moonshot numbers. They're conservative based on historical range expansions. The real if it breaks, it runs level is about $3, a round psychological number that often magnetizes price into strong moves. But here's the catch. If the breakout fails, XRP has to hold $2.54 as a support. Lose that, and we could revisit the $2.20, $2.30 for a retest before the next leg. That's why traders who understand structure aren't just watching the breakout, they're also mapping the retest zone. Either scenario still favors the long-term accumulation if your thesis is institutional adoption and regulatory clarity. Now, let's be real. Crypto narratives evolve fast, but structural themes last. Bitcoin's ETF opened the door. Ethereum scalability brought DeFi, Chainlink gave smart contract data, Quant connected blockchains, and now Ripple is trying to connect traditional liquidity with on-chain settlement in a way that regulators can actually approve. That's massive. And that's exactly why $2.66 zone could end up being one of those historical inflection points people look back on. From a psychological angle, this is also where the market retests conviction. Most traders freeze at resistance. They hesitate right before the breakout is forming. The crowd waits for confirmation, but the best setups rarely give it cleanly. Breakouts are messy, filled with fake outs and wicks that shake out weak hands. If you've been watching this level patiently, your job isn't to predict the next move. It's to be ready for it. When you zoom out, XRP is still massively undervalued relative to its last full cycle evaluation when adjusted for network growth and circulating supply, and yet sentiment remains lukewarm. That's the perfect environment for asymmetric risk. The difference between chasing a breakout and anticipating one is preparation. Traders who understand momentum don't need hype, they need data. They know that every compression phase, every failed breakdown, every higher low adds fuel to the next expansion. XRP's current structure is textbook, a tightening wedge sitting just beneath a horizontal resistance. With volume contracting and on-chain activity rising, that's not random, that's a coiled spring. So what happens next? If XRP breaks through the $2.60 and the momentum sustains, the $3 target is only the beginning. From there, it becomes a narrative-driven rally, where ETF rumors, payment adoption, and technical confirmation feed each other in a self-reinforcing loop. But if a breakout stalls, don't misread it as failure. Consolidation under resistance is still bullish. It's a sign of accumulation, not exhaustion. The only real danger zone is losing the higher low structure that's been building since $1.70. As long as that holds, the setup remains intact. Long term, the case for XRP is shifting from speculative to structural. For years, it was the underdog fighting regulators. Now it's a candidate for the same institutional spotlight that elevated Bitcoin and also Ethereum. The irony? The very asset that regulators tried to suppress might become one of the most regulated, compliant, and globally adopted tokens on the entire planet. The ultimate reversal story, and the markets love those. For traders and investors, the message is clear. Don't underestimate quiet consolidation. These levels, the ones that feel boring, uneventful, almost frustrating, are where most conviction builds and weaker hands disappear. The real fireworks happen when patience meets opportunity. And XRP's $2.60 zone might be that exact intersection. So while everyone else argues on X about which meme coin will 10X, remember that true wealth in crypto isn't built on hype, it's built on positioning. The people who were laughing at XRP during the lawsuit are the same ones now watching their charts light right up. And the people ignoring it today might be the ones asking, how did I miss this breakout 6 months from now? The market doesn't reward noise, it rewards patience, research, and courage when conviction feels uncomfortable. XRP is testing that courage right now. And if it passes, $3 is just the start. Above that, the chart opens up with territory that hasn't been explored since the last crypto era. So whether you're trading, holding it, or just watching from the sidelines, pay attention. Because when the charts and fundamentals finally align, that's not just a trade setup, that's history forming right in front of you. That's why I trade on BTC Exchange. BTCC has been around since 2011, older than most exchanges in existence, and is still standing strong through every market cycle. Whether you're trading Bitcoin, Ethereum, XRP, or Solana, BTCC gives you deep liquidity, lightning fast execution, and trust that's been tested across a decade of bull markets as well as bear markets. And here's the part that I always love to tell my viewers. If you use my link down below, you'll get 10% off of all trading fees permanently. That's real savings that compound with every trade. So if you're serious about navigating through this new wave of volatility and opportunity, hit that link below, grab your 10% discount, and start trading smarter with BTCC Exchange, the platform built for traders who don't just react to the market, they read it. Thank you guys so much for tuning in for yet another week, and I'll see you next week.